Hey, what's going on, everybody? It's Mr. Kingdom Cash Charles Dyson here, and in this video I'm going to show you guys the different types of trade orders. Okay, there's 5 different types of trade orders, right? And I'm going to explain what all 5 different types are, and this is going to be important throughout your whole entire trading journey. So this is a key subject to understand. But let's start here. There's only 2 objectives when you place a trade, right? You can either the market can go up, and when the market goes up, you want to be in a buy, right? And the market can go down, and when the market goes down, you want to be in a sell, right? Really simple and easy to understand. Market going up is a buy, market going down is a sell. Now, our objective is to be in the buy when it's moving up so we can make money. And when the market is moving down, you want to be in a sell so you can make money. Okay? Easy enough to understand. So the other possibility is if the market is going up, but you placed a sell, you would be losing money. Okay? And if the market is going down and you placed a buy, you would be losing money. Right? So the objective is to move in the direction that the market is going. When the market is going up, you want to be in a buy, and when the market is going down, you want to be in a sell. Okay? Now, you might have to watch this video again to understand what I just said, or it might click as I'm explaining. Okay? But either way, it's not hard, right? It's not hard. You're going to get it. All right? So I'm going to make this as easy and as simple as I possibly can. So right now I have a blank screen, and I'm going to explain 4 of the 5 different types of orders. Okay. Now, in example number 1, we're going to draw a line right here. Okay. And this green arrow is going to represent the market, right? So let's say the market is moving up, right? But it's not quite where you want to be in the trade yet, right? And the market, then you can place an order, right? Where when the market gets to a particular spot, it will literally put you in the trade automatically without you having to be on your phone looking at the charts, or on whatever device you're trading on. You don't have to be physically looking at the chart to place the trade, right? It's called an order. You can place an advance order for a trade, right? So in this case, if the market is moving up, you can put what's called a buy stop in, right? So I'm going to make some notes so you guys can see. This right here would be the example of a buy stop. Okay, that means the market moves up and it gets to a certain point, it puts you in the trade and continues moving in that exact direction. That would be a buy stop. Now, I want you to think of running a stop sign, right? You want to get to a certain place and then get put in the trade, and you want the trade to keep going in the same direction you were going. In this example, a buy. That would be a buy stop, right? Now, the opposite of a buy stop, obviously, would be a sell stop. So what do you think that would look like? It's a sell, so the market, right? So same scenario. You're not looking, you're not physically looking at the charts, but you want to be put into a trade at a particular point in time. When the market gets to this line, you want to tell the market, hey, put me in the trade, right? But you want it to keep moving down, right? So the market will be moving down, get to this particular point, and then keep on going. In this scenario, it would be called a sell stop. Okay? This one, and actually let's change it to red. This one would be called a sell stop. Okay? Now, the other 2 types of orders right, are a little bit different. And I don't want you guys to get confused by the name of these orders, right? So the market is currently moving down, but you believe eventually the market is going to turn around and go up. What you can tell the MetaTrader 4 platform to do is, I want you to put me in the trade, even though the market is moving down, I believe it's going to turn around and start going up. So the market moves down, and then it's going to put you in the trade. But you might be negative for a while because the market is still moving down, right? But you expect the market to turn around and begin to come back up, right? So you want it to put you in a trade at a particular point, even though it's not going the way you want it to go, but you believe it's going to turn around and start going the way you want it to go. This particular type of trade is called a buy limit. Okay, let's make it green for buy. This particular type of trade is called a buy limit. In the same fashion, let's say the market is moving up, but you expect it to move down eventually, right? But you're not going to be looking at the MetaTrader 4 platform. So what you want to tell the market to do, or the platform to do, is put me in the trade, right? Even though it's moving up, put me in the trade. I know I'll be negative for a little while, but I fully expect this market to turn around and start coming back this way, right? This particular type of trade is called a sell limit. Okay? So those are the 4 different types of orders. Okay? Now, if you need to watch this again, you can watch it again, but for the sake of time, I'm going to keep the video short. And I'm actually going to show you guys on the charts example of what this would look like. Okay? So what I'll do is I'm going to reset the chart. All right, so we got a chart, right? Let's say this candle, for example. Right? Let's make it white. This market obviously is moving down. But let's say the market is here. So you didn't necessarily see where the market was going. Okay, the market's moving. All right, now, you saw it move down, right? Let's just say you expected the market to come down. You could literally put in an order here, right, for sell stop, right? Because you believe it's going to come down, hit this line, and keep on going, right? And you're going to put the sell stop in for 1.33625, right? So you believe the market is going to just come on down like this and keep on going. So you want to be in the sell, but it's not there yet. So you can place an order called a sell stop. Boom, put you right in the trade, and the market kept moving, right? So the same for a stop, right? The market is currently here. You expect it to come up, right? Moving this direction, and you want to be putting the trade when it gets there. You put in what's called a buy stop, right? A buy stop, and when it gets to that point, boom, it puts you in the trade, and now you're making money, right? So that's the example of a buy stop. But what about this? Let's say here, boom, Market is currently moving down, but you expect it to come to this area and turn around, right? Then you can put in what's called a buy limit. Boom, market came down, put you in the trade, and then went back up, right? So you would be making money at that point. That's called a buy limit, right? Comes down, touches this line, turns around, and goes up. That's the example of a buy limit, right? What about a sell limit? Okay, let's say market is here, okay? And the market is currently moving up, but you expect it to come to this area, hit this line, and turn around and come back down. So you'll place what's called a sell limit. Boom, put you in a trade. Now it's moving down, you're making. So those are the examples: buy limit, sell limit, buy stop, sell stop. Now the fifth type of trade is just called a market execution, and it's going to immediately put you in the trade as soon as you push trade, right? And in the next video, I'm going to show you guys how to execute a trade. All right, watch this video again if you need more understanding. It will make sense as you practice and as you keep going. All right, for the sake of time, I'm going to keep the video short, but you can always play it back, right? Go ahead and move on to the next video once you understand these concepts.